Tilray just reported a knockout Q4 earnings report, beating on EPS and revenue expectations, which is absolutely amazing for the company. The company expects to generate a profit generate positive adjusted free cash flow. So in fiscal year of 2023. So this is great news for the company, and shares are up over 15% in reaction to this news. So what I'll do in today's video is I'll go over short interest, I'll go over the chart and give a price prediction, I'll go over the financials and fundamentals of the company, and then I'll also dive into some of the analyst ratings for the stock. So with that being said, let's jump right in. So starting off with a short interest here, the company has about 11% of the shares sold short. It's not pulling in here, but I know the number. I just looked at it. And then days to cover is at 5.1, which says that it takes 5.1 days of average volume to cover the shares that are sold short. So this 5.1 number is decent. Although typically when we're looking for a short squeeze, we look for a 10 number on this days to cover. So we're kind of halfway there in terms of signaling a massive, high likelihood of a short squeeze. So it's still likely here. If I had to give it a grade, I would give it basically a C to C minus, just because short interest as a percent of float is pretty high, and days to cover is still, somewhat, basically halfway there. So not shabby there. Short interest does look pretty intriguing. And then let's take a look at the price for the stock right now. Let's take a look at the chart and give a price prediction for shares. So we can see that shares were in kind of this, downward pattern, kind of this descending trend line here from about June of 2021. And then we broke below this trend line on May 30th and really accelerated that downside. So we really saw a massive drop once we broke that trend line. In fact, just to give you a number, so we saw a 27% decline once we broke this pretty strong descending trend line. So now that we came back above this level, I do think that could be a good bullish signal for shares. So we also crossed above the 50-day moving average for the first time since May, which is nothing to kind of sneeze at. And then really what stands in our way is the 100 DMA, the 150, and the 200 DMA. And we also have a resistance level at about $2.67, which is where shares had topped out basically in May and in April. And it's where shares had bottomed in January of this year and September of 2022. So seems like a significant level of resistance. If we are able to hold this trend line here and move higher, I would really wait until we got a move above $2.66 before I kind of dived into shares head first. And that's just a call on the technicals. I'll go into the fundamentals of the company, and if I think this company is a decent buy, which to kind of give you a sneak peek, I do. So really be on the lookout for this 100-day moving average. If we're able to cross over it, that would be a good sign for shares. But really long term, before I kind of bought some calls in this stock, I would want to see a move above the 200-day moving average and resistance at $2.66. So as of right now, unfortunately, the chart is not a screaming buy by any means. But with that being said, let's take a look at some of the seasonality trends for the stock. So we can see here that shares typically rise in July by 1%. And then shares also typically drop in August by 10%. So this screen shows me what on average the stock does for each month. So on average, shares typically drop 10.9% in August, and then October and January are the two best months on the stock's history. And July is also a positive month historically as well. So with that being said, we're kind of moving into a bearish seasonality trend, with August and September being one of the worst months for the stock. So be on the lookout for that. Definitely be cognizant that we're kind of moving into a bearish seasonality trend for the stock. And then with that being said, let's take a look at some of the fundamentals of the company here. So revenues increased by 20% to $184 million, and we're up 24% if you stripped out the currency impact. So this is a article released today. Just reading a couple of notes from it. Let me give credit here. So this is from Tapping Value on Seeking Alpha. And then also, so the top line hit it out the park, but were they able to make money out of it? The cannabis sector, especially in Canada, has been characterized by too many dollars chasing too few opportunities. Ever since the legislation of this market, everyone assumed that the entire country would be, getting high on a regular basis, and that just hasn't really happened. So we can see here that the general interest in cannabis really hasn't, kind of grown and matured as investors had hoped. That's just to give you a gauge. We're basically at the same consumer interest level that we were, over a year ago. So that kind of shows you that the interest in cannabis hasn't been, everything that investors had hoped. But with that being said, if you did take kind of a longer view on consumer interest in cannabis, it would look pretty good, right? If you took more of a year-to-year view, things would look pretty good for cannabis interest. And then the company showed $67 million of gross profit in the fourth quarter, a remarkable change compared to last year, where they had almost a $7 million loss. And then Tilray is making more inroads with the Canadian market, and its share has now reached 13%. So they have a 13% market share in Canada. The company has a number one market share in 3 different categories and is second in pre-rolls. So they're the second most, used company in terms of pre-roll sales. And then the company also has one of the most formidable balance sheets in the sector with about $450 million in cash and cash equivalents. Some investors may confuse the low stock price with bankruptcy risk, but that seems rather far-fetched for Tilray. Case in point, the company issued convertible debt at just a 5.2 interest rate. So the company definitely does have some solid cash to fund its future operations, which is very important for a company that obviously, is in full expansion mode and having some trouble, turning a profit. So with that being said, let's take a look at how the company's financials stack up to its own history and to the general sector. So as we can see here, Seeking Alpha, they put all these numbers relative to the peers and give it a grade. So in terms of valuation, the company gives it Seeking Alpha gives the company a B plus in terms of valuation. And when we take a look at EV to sales, so the company has EV to sales of 2.2, which is a sector median at which, when you compare it to the sector median at 4.06, definitely does signal that the company is trading at a cheaper valuation relative to the peers. But what's most interesting for me here is that the price to book value is at 0.3. So that means that the market cap only makes up 30% of the book value of this company. So this company is trading at a steep discount in terms of price to book ratio. So for those that don't know, a price to book ratio of 1 would basically mean that the market cap is equal to the book value of the company. So to be under this level shows you that the company is trading at a premium relative to its book value, which is obviously a very good sign for shares. And this compares pretty well when you compare it to a 2.16, metric for price to book for the sector. So decent numbers there. Price to book ratio is extremely attractive and is definitely something that I'll be keeping my eye on for this company. And I'll kind of show how that plays out for the general sector, because that price to book ratio being low is a general theme that we're seeing throughout the marijuana sector. And then revenue growth is at minus 3.4%. Over the past 12 months, and that is below the sector median of 7.5. And then revenue growth for the next 12 months is at 9.5%, which is right in line with that sector median. But this forward revenue growth number is actually below the 5-year average for Tilray. So yes, it's in line with the peers, but it's below Tilray's own history. And then another number that's above the sector but below Tilray's average is EBITDA growth. So EBITDA growth is at 23%, which is above the sector average of 6.3%, but below that 5-year average for Tilray at 67%. And then let's take a look at the profitability numbers here. So we can see that gross profit is at 12%, which is a solid number when you consider that what this means. So this is revenue minus cost of goods sold. Gross profit margin basically tells me what a company makes for what it sells. So to be at 12% is definitely a solid number. And this is well below the sector median of 55%. So not a good sign there. But like I said, this 12% number will rank out better once we kind of dive into the closer peers. And then in terms of cash per share, the company has 27 cents of cash per share, which doesn't seem like a lot, but it's actually over 10% of the market cap. So that's a pretty good number there. And then leverage free cash flow margin is at 9.8%, which is well above the sector median at -2%. So with all that being said, these numbers look pretty solid. Obviously, growth leaves some to be desired, right? We could see some more upside within that. But with that being said, let's take a look at how these companies kind of compare to each other. So we can see here that valuation is pretty much right in line with the peers. Obviously, GTBFI, which is, I believe, Green Thumb. So Green Thumb is profitable here, or excuse me, is projected to be profitable over the next 12 months, and is projected to be profitable with a 24 times PE 3 years out, which is a stark contrast from most of the peers here. Curaleaf also is projected to be at a 6 times PE in just 3 years. And then as we keep it moving here, revenue growth is at -3.4% for Tilray, and that is below Trulieve here and some of the other peers. So not a great number when we consider the peers. But when we take a look at that 5-year growth rate, it's basically in line with peers. So 92% compounded annual growth rate for the next 5 years is right in line with the peers here. So overall, the growth number for the past 12 months looks poor, but when you compare it to the 5-year growth rate for the company, it's definitely pretty solid. And then when we take a look at the profitability numbers for the company, we can see that the gross profit margin is at 12.7%. So this ranks out pretty poor, honestly, when you compare it to the peers here. So we have Trulieve at 54%, and then Green Thumb at 49%. So these companies are making more money on what they sell when you compare it to Tilray. And then leverage free cash flow margin at basically 10% for Tilray is better than Trulieve and is better for Canopy Growth and is basically in line with Green Thumb. So not a horrible number there. But as I said, the gross profit margin number is definitely underperforming most peers. And then let's take a look at how the company's balance sheet looks. So we can see that the company has $408 million in cash compared to $600 million in debt. So the company has $195 million more debt than cash, which typically would signal something to be worried about, but that's not really what I'm gleaming from this number here. So Trulieve is actually at $838 million more debt than cash, and we can see that general trend of more debt than cash kind of be consistent throughout the sector. So Tilray having $408 million in cash compared to $603 million in debt, that doesn't concern me much, and I don't think Tilray's balance sheet should be a concern for shareholders, especially when you compare it to the peers. So obviously, the sector needs to mature a bit, and I would need to see some technical signals kind of swing in the way of Trulieve of Tilray before I kind of dove in heads first. But I do want to make a note that in terms of price to book ratio, the company ranks out as the best company in terms of price to book. So that shows you that this company is trading at a discount in terms of price to book ratio relative to peers, which I do love to see, and I think provides an opportunity for Tilray. So with that being said, I do think the general sector is trading at a discount right now, especially these 4 names here. So with that being said, I am bullish on the stock long term. I just think we need to see kind of earnings change a bit and earnings kind of turn positive before I went super long into shares. And then when we take a look at the analyst ratings here, so we can see that there are 3 buy ratings for the stock, 6 hold ratings, and 2 sell ratings. So we have 1 underweight and 1 sell, so 2 bearish to 3 bullish, and then 6 neutral. And then let's take a look at some of the recent changes in price targets. Even so, even neutral, companies had to bring down their price targets over the past couple weeks, just given how depressed that stock has been. So we have actually the highest price target at $23 and the lowest price target at $2. So the company currently trades lower than the most bearish price target on the market for the stock. So that tells me that the company definitely is a bit oversold here and does have some upside when you look at these analyst ratings. Consensus, which is basically the average price target, is at $5.87, and like I said, that highest price target is at $23, which would be over 1,000% gain from here. So I do think these analyst ratings show that this company has been sold down pretty quickly, and the selling has been somewhat disconnected to the company's fundamentals. So I do believe that could provide a opportunity for shares. And like I said, I would want to see a move above $2.60 before I dove into shares. Just technically, I would want to see a move over this resistance level and over the 200-day moving average before I kind of jumped into some shorter term trades. But with that being said, if you wanted to dive in to shares long term, just trying to take advantage of that price to book ratio, I wouldn't call you crazy. Although for my money, I definitely would want to wait until we saw earnings turn positive and a couple more developments in this new marijuana industry. So that is my opinion on shares. I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.